Brian. Good afternoon, folks. This is Steve Rhodes coming to you live from the shores of, well, a very cloudy Delray Beach, Florida, filling in for Tommy O'Brien for the Tom O'Brien Show. Great to be with you on this marvelous Monday. I'd love to field your questions, and so the way to do that would be to send me an email. If you send it to steve@tfnn.com, send it off early, and in that subject heading, please put radio show question. That way it makes it easier for me to spot your email versus the junk email that comes across my phone so significantly. So if you do that, then we can take a look at what you want to look at. In short of that, we've got plenty to review inside the indices. Right now, you've got all the U.S. indices trading to the upside. Dow's up by 89 points, S&P by 31, NASDAQ 100, 140, Russell's up 13, Trendy's up 29, Semi's up 108, SOX is up, or the NASDAQ Composite up 155, New York Stock Exchange 67, the XAU Gold, the whole metals complex having a heck of a rally. Today, you're up about 3% for the XAU, the VIX is still below its 50-day exponential moving average, even though it is trading up 46 pennies, trading out at 15.91. Gold is up $77. Silver's up $1.26 out there. And we're going to spend a little bit of time taking a look at the gold complex. There was a question that was sent in early this morning during the 11 a.m. show, the Trader's Edge, and what I really wanted to do was be able to put together some information that I think will be helpful to each of you. So let's do this here. Let's actually get into that. Let's do that. Give me a moment here. So I had to go back and you'll see I had to go back and get some historical charts so we can have a historical frame of reference out here. And we're going to start by taking a look at the yearly chart for gold. So this is where we're at right now. This goes back as far as the data that I have, unfortunately, which gets us back to 1975. Now, the one thing that I want you to take a look at, if you haven't heard my show, the Trader's Edge show, there's a set of tools that I use to help us identify and time the market. One of those tools is the TD9 count pattern, a very easy pattern to learn. I teach that. You can become a subscriber of Mastering Probability. You can do that for 30 days or less out there. It costs you nothing, but you will gain a huge education. What you'll see is last year was bar number 8. This year is bar number 9. TD9 count tops form on bars 8 and 9 to the bar following bar number 9. If we take a look at Goldilocks, we can see that when it actually last topped, which was back in 2011, it was the bar following bar number 9. In fact, that high held for 15 years out there. This is an annual chart that we're taking a look at. So what this tells me is we're either going to get a top this year, or more likely next year, just following that same pattern from back in 2011. So that's an important perspective for you to take a look at. As far as yearly rallies, this looks like to be the largest rally. The second largest that we have out here would take us back, yearly rally would take us back to 1991. So likely not to top out until next year. This is a gold's top that formed the week of January 25th. And by the way, when an instrument is going to top or bottom, we will get a signal out there. And all you have to really do, which I'm doing with you this afternoon, is taking you back historically. And here what we do, if we take a look at the last significant top, I would say the last significant top would take us back into the 1980 timeframe, was that week of January 25th. And what you'll see, remember we looked at the daily chart. Remember that 2011 top was the bar following bar number 9. On this weekly time frame, it also was the bar following bar number 9. That set up that significant top out there. So topping signals will occur. Doesn't mean that it'll occur on the daily or the weekly and the monthly all at the same time. It can, but what we will do is, and as you know, if you watch my show, we always are taking a look at daily, weekly, and monthly to give us a perspective of what takes place. Now, when we form TD9 count tops, you'll see a couple blue diagonal arrows out there. What typically unfolds is price will pull back to this green or red squiggly line. That's referred to as the oscillator and change line. Again, it's another tool that I teach and share with you. It's very important to understand that because that is a key level of support. For example, even in the weekly TD9 count top, look at that big pullback from about $880 or so, all the way to where? All the way back to that green oscillator and change line. So that's 1980 top. If we take a look at January 22nd, 1980, what we're going to see here on the daily time frame is that it formed an island top. That is a set of Japanese or candlesticks out there. That is the most bearish signal of all. So we had a weekly TD9 count top, and then we had a daily island top out there. When gold does top, we will see these type of topping patterns. May not be a TD9 count, could be a Rhodes momentum indicator signal. Again, another tool that I share. If we take a look at gold today, gold is going to negate a daily TD9 count top. That formed 3 trading sessions ago. So that tells us when you negate a pattern like that and you do it relatively quick, tells you about a strong upward momentum move. Well, if we take a look at the weekly time frame chart out here for December, you can see there's no topping signal. There is a Rhodes momentum indicator signal present. That's a black diagonal line, but that requires a bearish reversal candle to confirm that top. For the monthly time frame, what I want to do is I want to take a look at the continuous contract. And the reason I want to do that is because I need more data than what I can grab just off of the December monthly contract. Here, this shows that we're in wave number 7. That's letter G. When we actually add all the historical data, we can see that that is not the case. In fact, what we did was we negated a wave number 7 signal. So from a monthly standpoint, we do not have a topping signal for gold for its monthly time frame. We do not have a topping signal for its weekly time frame. And we are negating the daily signal. You should expect and anticipate that gold will continue to rally. That doesn't mean that it can't pull back for a couple days. 2 to 4 day pullbacks are just simply normal, kind of referred to as knee-jerk reaction lows out there. The best bull markets occur when the instrument that we're taking a look at is trading higher in all major currencies. This chart here in the upper left-hand corner shows you gold trading in dollars, but next to it is gold in euros, then yen, Great British pound, the Canadian loonie, the Swedish krona, Swiss francs, the Chinese yuan, and even the Russian ruble. And guess what? We're at new all-time highs today in all of those currencies. What's that tell us? We have got a worldwide global rally. Don't expect it to fail anytime soon. If we take a look at gold in all the Middle Eastern currencies out here, you got the Kuwaiti dinar, the Egyptian pound, the Jordanian dinar, the Syrian rial, the Syrian pound, the Saudi rial, that is, the Syrian pound, the Iranian rial, the Iraqi dinar, and the Israel shekel out there. That's the only one, the Israeli shekel, that is not at a new all-time high. Now, maybe that sounds like good news. What it really tells us, I believe, is that we are in for war, more war than what currently is going on over in the Middle East. Now, this chart here, some people might conclude, hey, you know, Stevie, gold's really moving higher because the dollar's moving lower. The bottom portion of the screen is the U.S. dollar. When did it bottom? Back in 2008. Has been trading basically sideways to higher ever since. So too for Goldilocks. So don't think that the reason that gold is moving higher is because the commercials on television tell you that the dollar is trash. The dollar is not trash. The gold is not trash. These charts are not trash out there. When we come back to this break, I'll finish this. Then we'll go take a look at the indices and a couple of requests that have come in. Steve Rhodes filling in for Tommy O'Brien. We'll be right back.